House prices rise. Let's have a look. Hello everyone, Florian Heise here, stein of coffee in hand, and I thought we'd have a look at the latest residential property price indices in Australia. Now the ABS released this information this morning and the prices have gone up. They've gone up. So let's jump over to trading economics and we can see that the index has been going down quarter on quarter and it's just shot up by 2.4%. Now I know some people don't exactly trust the data sources that are being drawn upon to create this information because it's not really based on the valuation data or the actual data that comes from state revenue. A lot of it's based on the same data that's being reported in the media, which was a big surprise to me. Anyway, let's have a look at what we have here. So, the weighted average of 8 capital cities from June to September has gone up 2.4%. From September 2018 to September 2019, we're down 3.7. Sydney is up 3.6, but the year-on-year change is down 4.6. Melbourne's up 3.6. The year-on-year change is still down 3.5. Brisbane, good on Brisbane, is up 0.7, but the year-on-year change is down 2.6%. Adelaide is down 0.3. Year-on-year change is down 1%. So notice how Adelaide was down this last quarter, but overall, the year-on-year change has been, well, slower, less. And that's because we've got all this foreign investment here. And this is a chart from the Foreign Investment Review Board. You can see that big spike there in, 2014 to 16. That black line represents the percentage of approved investments in new housing by foreign investors. It's over 90% at one stage. A big chunk of that came from Sydney and Melbourne. And here is a favorite quote that I'm going to bring up. This is from Matt Berry, from his essay he wrote on Medium and LinkedIn. Essentially, our economy is built on a house of cards. And the takeaway from this was that 24% of all of the GDP growth in the civilization, in the nation, in 2016 came from a small area between Sydney CBD and Macquarie Park. If you combine that with the fact that 57% of the wealth of our nation is in housing, you can understand why everything's so important and why Sydney and Melbourne have had such drastic price changes over the year, and why what would be considered a big leap relatively still is, it's going to need a fair bit of growth to get back to where it was. So Perth down 1.2, down 4.6 on the year. And that would say why all the other cities that haven't really suffered from the boom as much as Sydney, and I'm just going to move this over a bit more, haven't suffered as much as Sydney and Brisbane, won't be feeling it as badly. There we go. Won't be feeling it as badly, the property changes. So if there's a huge takeoff in property, I'm hoping all of us in these other cities will be fine. So Hobart actually went up 1.3%. Year-on-year change 2.1%. So it's the only one that's recorded a increase. Darwin down 1.2. Year-on-year negative 5.4. Canberra down 0.5. Year-on-year 1.5. So the value of dwelling stock, there you go. And this is in millions. So $6 million. Median price of residential dwelling, $660,000. Number of residential dwellings. So there you go, 10 million. So this is the all sectors. Residential property price, weighted average in 8 capital cities. And we're seeing the percentage change. So it was dropping. It looks like it's jumped up in the last quarter. Now, is this the beginning? Many people will have they're arguing that this is the sustained growth to the housing sector, a sustained lift up to the economy. And I would love that, to be honest, because I'm a homeowner. It would be great, but I just don't see it. I don't see it because I'm looking at too much other things. I'm looking at GDP data and it's not looking good. I'm looking at wage growth. These are the predictions from the RBA, just showing you how many times they've failed in their predictions of wage growth, and yet we still turn to them to manage our economy. If we look here, this is showing you where wage growth actually has occurred and the disparity between the public and private sectors. So we're having wage growth, large portion of it is in the public sector. So that's a bit, it's isolated from the real economy because it's a political environment. When you look at building approvals, they're also trending down. Okay, so that may be there's more stock available, but there's a lot of stock on the market. There's a lot of stuff available, particularly in apartments. Maybe people are holding off. Consumer sentiment, that's been trending down, guys, as well. So when people are saying that there's, this is a return to the boom, I can't see it. This foreign investment was a big portion of the boom, last boom. It helped fuel it. What do we have now that's fueling it? Look at that dive in foreign investment. Okay, so that's why I'm cynical about all of this, and that's why I'm suspecting we're seeing a dead cat bounce, perhaps. Let me know what you think in the comments, everyone. So Sydney is up, Melbourne's up, Brisbane's up, Adelaide down. Here we go. So the average 2.4. Weighted average of the 8 capital cities rose 2.4%, fell 3.7% of the last 12 months. And here we have, we'll go through that. Total value of dwellings, we've gone through that in the notes. Revisions apply to estimates for the second and third most recent quarters of the total value of dwelling stock. See preliminary and final series under total value of dwelling stock in the explanatory notes. And to the median prices. Why don't they tell us what the revisions were? That would be more interesting right here. Okay, so let's jump to the second portion here. And this is their media release. So residential property prices rose 2.4% in the September quarter 2019, the strongest growth since the December quarter 2016, according to the figures released today by the Australian Bureau of Statistics. Sydney and Melbourne residential property prices recorded strong growth in the September quarter. Property prices rose in Sydney by 3.6%, Melbourne by 3.6%, Brisbane by 0.7%, and Hobart by 1.3%. House prices rose 4% in Sydney and 3.7% in Melbourne, while attached dwelling prices rose 2.8% in Sydney and 3.6% in Melbourne. ABS chief economist Bruce Hockman said the increase in property price is in line with housing market indicators, particularly in Sydney and Melbourne. New lending commitments to households, auction clearance rates, and sales transactions all improved during the September quarter. Now, I don't trust the auction clearance rates, because I will show you here. Those of you that aren't familiar, we'll jump to the Heise Says website. Here, wait, nope, jumping to the wrong thing, guys. Pressing the wrong button. You can see here in related articles, fake or recent articles, fake auction clearance rates exposed. And this is a piece where I suggest you have a read and share it. But essentially, through data mining, we prove that the auction clearance rates that are published are completely wrong. They are, overinflating the figures. There you go. So I'm not trusting any of this. And what the counter argument is, well, they may be overstated, but the trend is still right. So even though it may be 10, 15% higher, but it has gone up. So it's just that up that matters. And it seems very disingenuous. It really does that these people are pretending that they don't appreciate the fact that what the number actually is will impact the market and will impact decisions people make. So residential property prices fell 3.7% in the year to September quarter 2019. That's the biggest thing. There is also a noticeable improvement from the 7.4% annual fall in the June quarter to 2019. So it fell by 7.4%, and because of this spike, it jumped up. But the amount of product on the market was also lower than anticipated. So, and here we go, established houses, that's what they're saying, just what the terms are. The total value of Australia's 10.4 million residential dwellings rose by 189.9 billion to 6,869.4 billion in the September quarter 2019. The median price of residential dwellings in Australia is now 660,000. And this is where it all matters. Okay? This increase in perceived wealth, even if it's paper wealth, even if people just assume that they've got greater wealth, it will hopefully encourage people to improve this confidence, and then they will run out and make purchases. And then that will help drive up wages, and it will help improve gross domestic product. Hopefully. That's the strategy. Because so much of our wealth, of our nation, is tied up in this housing sector, guys, it is scary. It is scary. Now, I'm going to bring up another one of my favorite websites. And this is the Observatory of Economic Complexity. You can see here, we're 59th in the world. If you go to the Harvard study, we're over 90. There's different methodologies for measuring it, but in all of them, like the auction clearance rates, the trend is down. We're trending down with regards to our economic complexity. And I know people are going, Florian, you can't criticize these industries. They're very advanced. That's not the point. Even if iron ore is mined with highly advanced machinery, the machinery is fabricated and manufactured overseas. It doesn't add to the complexity of our economy. We're still pulling stuff up out of the ground. I remember we had a project where we were replacing lift motors in a high-rise here in Brisbane. I went and had a look. I should show you the photograph, I'll find it, of the old engines. Actually, why not do it right now? We'll go to PCA right now, and you can see the existing, yep. Okay, we can see here, I mean, here we go. This is the lift motor room in here, and this is from a point cloud scan that we did. This is one of my other businesses, guys. And these engines here, they were made in Newcastle. Just having a look. Did I bring another image up? You can see here behind the thing that's going underground. But they were made in Newcastle. Where do you think the new ones are made? In Spain, and imported. So guys, let me know what you think. Do you think this is a genuine increase in housing property? Do you think it is just a dead cat bounce? Or are you, going out there and borrowing more money, which we're not seeing happening, to the bank to invest in, gold, silver, Bitcoin, power generators? Still too much Far Cry 5. Anyway, guys, take care. Let me know what you think, and I will see you all next time. Bye for now.